I'm Joe Clark, part of the Financial Enhancement Group's allocation team, bringing you this week's Market Carver. Couple interesting stories that are going on. One, you may have heard the news by now that Amazon's market cap is now greater than Walmart. Well, living in Anderson, Indiana, you can imagine the surprise. The last time this happened was 1999, and that's when Amazon's market capitalization passed General Motors. And Anderson went nuts. How could this brand new retailer with no earnings actually have a market cap greater than General Motors? Well, today it's worse than that. Now it's Walmart. And for the record, for the first time in history, Amazon actually posted a profitable quarter. They actually made money. Remember, market capitalization is one share of a company's stock times the number of shares that are outstanding. So people talk about the price of an individual share, but when you talk about market cap, what matters more than the price is really how many are out there. And you do have great disparity between different companies. GE, Microsoft have close to 10 billion shares outstanding. Harley-Davidson has closer to 300 million that are outstanding. And when you talk about share buybacks, that's when they're buying back some of those shares. So the numbers do change from time to time. A very critical story that emerged over the course of the weekend is really China. And the headlines you've heard that their stock market got hit fell a little over 8% coming into Monday morning. Last time that had happened was actually 2007, and then before that in 1997. Big drops, but made up a large percentage drop of their GDP. To put it in perspective, relative to GDP, when the United States, when we had our fallout in 2008, we lost the equivalent of 1/10 of a percent, 0.1%. Of our GDP. In 2000, in the tech wreck, 0.7. China so far has lost 1.3% of market value as it relates to its GDP on a percentage level. Very, very concerning. Perhaps the biggest telltale sign that came out of China this week, though, is that 97% of their debt is actually AA or AAA rated. You contrast that with the United States at 1.4%, and it will let you know that the whole story is probably not coming out. If you want to know more, you can catch the radio show this Saturday morning. I talk about it then, 9 to 10 on WQME, 10 to 11 on Shine 99, and of course you can always find us on Thursday afternoons on WILO between 4 and 5 p.m. If there's anything we can do to be of service, to have a cup of coffee, to discuss what this means for you and your portfolio, please don't hesitate to let us know. You give us a call at 800-928-4001 or simply respond to this email. God bless. Have a great week. We'll see you again soon.